let's welcome our global expert, Sunil Garg of Global Research JPM joins us now all the way from Hong Kong. Sunil, good morning to you and a very happy Diwali. I suppose you celebrate it just as much out there in Hong Kong.
Yes.
What's the global scene looking like and India's place in it? Over the last 1 week, it appears to be that the risk aversion has gone, the growth scare has been overcome, but India is not quite the outperformer it was before the scare began.
Okay, so listen, first up, a very happy Diwali to you and your viewers as well. And yes, I think, one thing that is very clear is whether it's risk on 1 week or risk off another week, I think we've definitely seen a spike in volatility across markets and across asset classes. And I think that's something which is probably going to put a lot of forecasts at risk. But I think if we step back and look at global markets, you've had different reasons for concerns. September was probably more driven by the end of zero interest rates in the developed world, particularly the US, and obviously a lot of political noises in many markets. And then more recently, I think there's been concerns about global growth. I think what we are looking at from an economic growth perspective, global growth will be above trend in the second half, and it's going to be particularly led by the US. I think the jobs data is continuing to be strong. But from a market perspective, I think the most striking factor is that since 2011, every correction has been a buying opportunity, and most corrections have been shallow. Now, with the index, the S&P, over the last couple of days, getting back onto trend, I think at this stage, the message we have is unless we see a big breakdown, we think it is time to stay constructive. And what's very interesting is, and we'll come to India in a moment, that Asia and in fact broader emerging markets have actually outperformed through this period when we were seeing heightened volatility and corrections in the developed markets. So I think the outperformance message on emerging markets in Asia is also very much intact, and I think that's been a continuing theme. That's the one that we like substantially. As far as India is concerned, look, we've had the market run up ahead of events. So, will you go through a period of consolidation, perhaps modest underperformance? I think this is the clearest opportunity amongst major markets. So, when I say buy the dip, I think this is a market where I think the confidence is probably amongst the highest. And so to that extent, I think, we absolutely like India cyclically and structurally.
One can't hear of better wishes on a Diwali day.
Yes, in fact. Sunil, hi, good morning. How encouraged, I'm sure very encouraged, but how encouraged are foreign investors with respect to the spate of reforms that have come through? And do you think this Modi premium is here to stay in the sense that India will continue to outperform most emerging markets for the next 6 to 12 months?
Look, I think, first of all, any premium is going to stay as long as you're delivering. So I think there was definitely anecdotally a lot of calls for the new governments to deliver some big bang reforms. And, clearly there's been a lot going on in the background, but you do need tactically to deliver some on some of the bigger spaces to keep the confidence going. And I think what you've seen over the last few days in the energy sector, I think is clearly meeting those demands. So this is not just reform and encouragement by that, I think definitely so, but it's also, I think, reaffirming the faith on which the new government was elected. So I think from that perspective, it also adds to the confidence. Obviously, execution is going to be important. So you've liberalized diesel prices. There is always going to be a time when prices rise. So let's see if the price deregulation is going to be symmetrical, but at least the confidence is a lot higher. And I think it kind of adds to the story. We've had some by-elections delivering some positive results. So again, the Modi premium or any government premium is simply going to be a function of execution and delivery. But for now, I think it's definitely looking good. And yes, outperformance is very much our call.
Okay. Well, I'm going to ask you a much more trader question or a near-term question.
Okay.
The last month, say, better part of October or maybe even from the last week of September, we have seen foreign investors largely selling and even balking at buying as we get towards the 8,000 mark. And that's why the outperformance has not quite been there in the last 4 weeks or so. This is despite the fact that the last 4 days after the state election results, we have seen the government chugging along very nicely with reform steps. Would you therefore say that probably this quarter we are not going to see too much of buying, or we are going to see it come?
Look, so first of all, as far as money flows are concerned, my own view is that a lot of our markets attract investors who are seeking growth and who are seeking opportunity. So yes, you can have outflows, inflows for short periods, but ultimately, if you're delivering a growth promise and a growth opportunity, I think the money is going to come. Now, what has also happened is, if you look at the broader context, right, emerging markets have seen very substantial outflows on a year-to-date basis, and a lot of that's been concentrated in the last couple of months. And, you've had deep concerns in geopolitics, perhaps pandemics, and a few other things. So, when you get back onto a risk-on mode, then some of those markets are likely to attract money initially. I mean, India has been holding up on a relative basis a lot better during this volatile period. So from that perspective, I think just on a very short-term basis, it's okay to see that you find some more money flows going into other markets. But if we then look at, the markets also been holding up very well. What I mentioned earlier is the Nifty has run up well ahead of events and in a lot of expectation. So you will get periods of consolidation. You'll get some periods of underperformance, consolidation. But this is, as I said, one of the markets where the confidence in saying buy the dip, buy corrections, buy consolidations is probably the highest. But yes, you will get short-term periods of underperformance. But that's, as I said, creates opportunities.
Okay. What about the macros, Sunil? One view in the market is that if the government moves quickly on fiscal policy, which it is now, then the RBI will start to move on monetary policy. How soon do you think we could see the first rate cut?
Look, I think the last print in both CPI and WPI was very encouraging. I think it surprised the market very positively. And, if you look back, the mini correction that we were seeing in the Nifty, that reversed basically on the back of a positive inflation print. And, that clearly underscores the opportunity for the RBI to, ease monetary policy. I think also important is the fact that global commodity prices have been falling, and I think in particular oil, which is what led to the oil price deregulation, diesel deregulation, and also that leaves room for further declines in inflation. So I think RBI's monetary flexibility is increasing substantially. I'm not going to jump into a specific timing. I think our economists have the forecast laid out, but I think the events over the last few weeks, particularly the big drop in oil prices, and also the government using that as a means to further bring down inflation, I think is making the probability of a rate cut sooner rather than later.
Right. Let me end this conversation with one more wrap on your view on the global markets. Do you think 1860 is about the low, the growth scare and the risk-off that we saw, taking the S&P 500 down to 1860 is about the low we have seen for the moment? Is that a firm bottom? Are you inclined to believe that with the growth numbers in the US and the fairly liquefying policies of the ECB and the BOJ and the Bank of China, we are going to see all these, we are going to see the S&P 500 break to new highs in 2014 itself?
Okay, so a couple of perspectives here. Number one, I think I've been using 1900 and more like 1904, 1907 as probably a more important level, and I think a break below that was troublesome. I think yesterday we firmly closed above that, so I do think that if we use 1900 as a broad round number guideline as a level to watch, I think that is going to be pivotal in this market. As far as breaking to new highs is concerned, remember tech was a very substantial part of this rally, and tech was also the sector that had given up the most. And we saw IBM won, and there was a big drop. Netflix had a big drop. So to that extent, I think tech getting back in flavor, and to some extent led by Apple's strong numbers beating market estimates, was critical. I think one of the biggest sectors that's been a laggard in this entire rally to new highs in S&P is the financial sector. I think we saw an outperformance build over September when the markets were going through volatility. That's kind of reversed a little bit. But for the S&P to go higher into new highs, I think participation by the financial sector and particularly the big money center banks is going to be absolutely crucial. So we're constructive. I think, we're saying stay with the trend. And, unless we see a big breakdown of important levels, it's premature to call for a sell. Yes, I think there is caution when we watch levels, but the underlying tone is constructive.
All right, we leave it at that. Thank you very much, Sunil Garg, and have a great summer 2072. Have a great year ahead.